average American or immigrant in the US receives $3,200 in tax refunds. So it's important to know the reasons and know the right deductions you get to make it the highest. Majority of H1B holders do not report their worldwide income. So hello everyone, today we have Hemant again on the channel, CEO and co-founder of iNRI that helps you invest as an NRI in India and also file taxes as an immigrant in the US. So hi Hemant, can you please introduce again and a little bit about the tax tool?
Hey, thank you, Arnold, for having me today. Really excited to be back again. Hi, everyone. My name is Hemant. I'm the founder and CEO of iNRI. I am very stoked to be building a super app for NRIs. We started with investments as the first product. We launched 2 years ago, and so far we have 11,000 NRIs on our platform. And now we are excited to be launching another product, and this is more about US taxation. So we offer tax filing for US NRIs right from the comfort of your home, a complete full service model. Basically, you just add your personal information, name, address, your dependents information, and then upload the documents like W-2, 1099, and we connect you with a tax expert who help you file this, on a video call or even, async as you require. And, just review your return and file it, and completely is safe and secure. In fact, we are a IRS approved e-file provider, which is as good as TurboTax. And we're proud to be, working in this area.
Exceptional. So, first of all, I want to give some background. As an H1B holder, it is a gray area. So, I talked to my tax advisor that majority of H1B holders do not report their worldwide income. In the US, you have to show income
Yeah.
not just in the US, but all over the world, whether you have some income
Yeah.
in India, whether you have some money in India, whether you have some mutual funds in India, whether you have some house rent in India, you have to report
Yeah.
worldwide income. But it is also a fact that majority of people do not report. We'll talk about the forms you have to file, but
Hmm.
can you explain why is that, and is that okay for H1B holders who are doing that?
Yeah, so let's read the IRS first. So, as per IRS, if you are a US tax resident, you are required to report your foreign income, your assets, and if it's certain, sometimes it kind of exceeds a certain amount, then you have to do file or certain forms. And different income can be treated differently, and that's where these have like different forms, such as for interest or mutual funds and so on. Now, coming to H1B, I think H1Bs, give themselves a benefit of doubt here. They're like, hey, I've just been 2 years into the US, and am I really a permanent resident? And if not, that, certain things may not apply for me. So they kind of self take that decision, and sometimes, defer that by going to a tax expert because it might be expensive to consult one, and may not be very accessible, right? But at the end of the day, if you are an H1B and you're paying taxes in the US, you are required to report, your foreign income, and that includes India income as well.
Correct. Because as per tax purposes, when you are an H1B visa holder, you are tax resident in the US. So it's important for you to keep that in mind. So
Yeah.
let's talk about what are the types of taxes as an Indian citizen you need to file in the US. So there are so many forms. It is always overwhelming process. You have to fill like your 1090 form, which is any US citizen files as well, permanent resident files as well. And if you have worldwide income, you have to file F bar as well. And there are some other forms for income. So can you please break those down?
Yeah, sure. So, a US resident or tax resident requires you to, to be filing 1040. So to correct that, and 1040 is required if you are having US income. So any W-2, which is your salary, 1099s, if you have investments or savings, interest coming from banks, then you are required to report that, and that all goes in 1040. So 1040 is the base return. And now on additional to that, you can add supplemental forms that talk about, additional income coming from different sources. Now, with respect to foreign reporting, you have FBAR. So if you have something, like assets, liquid assets, like that includes your cash, bank balance, basically, and any liquid investments, if that exceeds more than $10,000, then you are required to file this FBAR form. And there are additional forms if it this total value exceeds $100,000, then you're required to file FATCA form. And now if you have certain investments, let's say like mutual funds, So there is a special tax treatment on this, which is called PFIC, and that requires you to file 8621 form. So there are a bunch of these forms, which kind of makes it complex. But if you want to be compliant, I think it's best to do so.
Okay, so let's break those down. So
Yeah.
first one is FBAR. If you have even a bank account in India, let's say
Yeah.
SBI, HDFC Bank, even if you have 8.5 lakh rupees or $10,000, you have to file FBAR. So even if for one day you had
Yes.
8.5 lakh rupees, you have to. If for the whole year you had 8.3 lakh rupees, you don't have to, right?
Yes. Yes.
So let's say someone doesn't have bank account in India but has mutual funds in India. So let's
Mm.
say someone has UTI mutual funds of 8.6 lakh rupees, which is more than $10,000. So that also goes in FBAR.
Yeah. So FBAR includes your liquid assets, and that will also include mutual funds, because mutual funds are, like stocks, which can be easily redeemable within, let's say, a week.
So okay, so FBAR for any kind of asset you have which is liquid,
Hmm.
you have to. So all the mutual funds, stocks, etc. But if you have a house worth more than $10,000, you don't have to report in FBAR, right?
Yes, that's correct. Yeah, house property is not a liquid property. It's a liquid asset or immovable as well.
Uh-huh.
So that's not required if it exceeds even 10K.
Okay. Now,
Yeah.
second form we need to talk about is FACTA. So let's say someone has more than $100,000. That's what you said, right?
Mm-hmm.
So more
Yes.
than $100,000 in mutual funds, in bank account, or in stocks, but not in house again.
Yes. Yes.
Then you have to report in FACTA.
Yes. Yeah, so they are required to be reported, and to also clarify, it's more about reporting. The tax is always only on the income. So many people sometimes fear that, hey, if I report this, is that will IRS come to me? But I guess it's not. It's just saying that, I have this, and this value is this, right? That's it. Uh,
Okay.
yeah.
So it gets even more complicated. So for any kind of house, you don't need to remove. So it gets even more complicated. So this is all for liquid assets. But
Yeah.
what about if someone has a house in their name? Let's say many H1B holders have, like, let's say their
Mhm.
mother's name and
Mhm.
their name in a house in India. What about
Mhm.
that?
So, I mean, one can go more technical here and basically talk about joint ownership and what is the percentage of ownership, right? So, if you own like 50-50, then 50% value is something that you can attribute to yourself.
So
Yeah.
how would you report in US taxes? FACTA, FBAR, or TFIG?
Yeah. So, generally, from a real asset or a property, you would take account the income. So, if you, let's say, have this property and which is put up on a rent, then you're getting this rental income. And maybe, in that case, what you can do is like attribute 50% of that income to yourself and report that as a foreign income and file it, when you file your taxes.
Excellent.
Yeah.
Okay. Uh, Breaking down even further. So
Mm,
in these three forms, TFIG for mutual funds, FBAR for 10,000 or more, FACTA for $100,000 or more. So
mm,
how would you pay taxes? Let's say someone has, UTI mutual funds that
mm.
appreciated by 20%. It was like worth, let's say 10, 20 lakhs. It became 20% is 4 lakhs. So it became 24 lakhs.
Yeah.
So now I haven't sold those mutual funds. Will I pay taxes on that 4 lakhs or no?
Yeah. So interestingly, as I mentioned earlier, mutual funds have this special tax treatment, and there are different elections that you can take for mutual funds, but the most commonly which is used is called MTM, which is mark to market. What that means
Oh.
is in the calendar year from January to December 31st, which is the tax year also of the US. The IRS says that if you make any income, or sorry, not income, but any gain into this year, right, from let's say Jan 1st to December 31st, you are required to put this under ordinary income. So ordinary
Mm.
income is basically your W2 savings interest. So that will be taxed at that slab rate. So let's say if you are taxed at 30%, for example, then this gain of 20% will be taxed at 30% in that year.
Okay.
Yeah.
Can you please give an example?
Basically, let's say you invested 10 lakh, you
Uh-huh.
got a profit of 20%, so 2 lakh profit.
Uh-huh.
This 2 lakh profit basically you convert into dollars. So that would be roughly $2,500, let's say, right?
Uh-huh.
$2,500, you have the tax rate of 30%.
Mhm.
So like that would be $750 now.
Correct.
So $750 would be the additional tax that you have to pay because you have got this foreign income. Not exactly income because it's unrealized, as you pointed out, but because this tax treatment is specifically applies to mutual funds, you're required to pay that, even if you don't realize.
Okay, so even if I don't sell my mutual funds in India,
Yeah,
I still have to pay taxes on that in the US.
that's right. As
Okay,
per the law. Yeah.
interesting. So, what about double tax treaty? Like, as an Indian citizen,
Yeah.
you in the last podcast you said
Hmm.
that so you pay the upper limit of both. So let's say US has 30% taxes, India has 40% taxes. So
Yeah.
you pay the upper limit, right?
Yes. Yes.
So you don't pay double taxes. Let's say you paid 10% less tax because you're in the US.
Yeah.
So for the income in India, if you've already paid
Hmm.
taxes with 30%, you pay the remaining 10% based in India or based in the US.
Yeah, that's correct. But in this case, because you're not realizing anything in India, because you've not sold your assets, so there is basically effectively the tax rate is zero, and there is no tax being paid in India. So whatever is applicable in the US, you will pay that. But imagine a scenario, let's say you sold the assets, so you realize that income, so you may have paid, let's say, 15% there. So the remaining 15% will have to be paid in the US. So that's where the double tax avoidance kicks in when you have paid on both ends or when you have to pay on both ends. But if you're just paying on one end, then other side is a minimum, and so basically the max side kicks in.
Okay, and for that, tax accountant can help us. Yeah,
Yeah,
because it's so complicated. And what are the implications? So I remember you gave a so good example when you're parking your car.
yeah,
If you park in a no parking zone, there's a
yeah,
50% chance you will be caught or not
yeah,
caught. Your car will be towed or not caught.
yeah,
Your car will be towed or not towed. But
yeah,
it's better to prevent that than paying fines worth $10,000 a year as per as per IRS, and also risk of giving that assets up to 50% to IRS.
yeah. So I mean, compliance is a voluntary thing. It's like, you I mean, the government puts the onus on the individual that, hey, you have something, so report it, right? And if you're making an income out of it, then report it. And just to draw some analogy, as you said, about parking, like it's when there is a spot, let's say, you park in a handicapped spot, right? I mean, it is okay if there is no one catching you, but if they catch you, there's a fine of $250 or more, right? So it's like that, if you want to do it right, you would not do so. But because of certain situations, people feel that they take a benefit of doubt, or they feel like it might not be reported to the IRS, and so it's okay to kind of ignore it. But again, it depends on person to person, how compliant you want to be. What's the situation at stake? Like if you, let's say, have just $15,000, maybe it just crosses the threshold, right? In that case, compared to a person who has 150K, right? So in that case, the stake is much higher, and that's where you would require to be more compliant. And it's like you have a Mercedes or you have a Corolla. You don't care about a Corolla maybe in that case, and but if you have a Mercedes, yeah, yeah, you even care about a scratch. So
Yeah, very well said. Now, coming back to the house part, you said that for a house, paying taxes depends on income and also depends on how much you own the house. So let's say I own 50% of a house in
yeah.
India, and that house is, let's say, 50 lakh rupees, or let's say 1 crore. It
Hmm.
becomes 1.5 crore in 1 year. So
Hmm.
do I pay 50 lakh gain that I got? I pay unrealized taxes on that 50 lakh rupees in the US as well.
No, so the good thing is this tax thing does not work on capital appreciation, and particularly on real assets, which is a property. So even if your
Mm.
property were becoming 10 crore, so that gain of 9 crore, doesn't apply because it's not realized. That's one. Second is real assets don't count again, this thing, like I mean capital appreciation, because this is a capital appreciation and which does
Uh,
not will get any taxes. But if you were to sell this property, now you have made a realization of this 9 crore as a profit, let's say, right? Now you will be required to report it. And so any tax that is liable will have to be paid.
That is
Yeah.
very interesting. So
Yeah.
it is very complicated. For that, can you please give us a walkthrough of iNRI tax filing platform and how can people use it?
Yeah. So here comes iNRI, the solution for every NRI, I would say, living in the US. Now, as Harnoor and I spoke about, US taxes can be complicated. Now, there are two approaches to do so. One is you do it yourself. There are many tax softwares available, TurboTax being one of the favorites, right? But to do so, you need to be skilled, you need to be educated enough to understand all the IRS codes, and obviously requires time and can be stressful if you're like, hey, am I doing this right? And that's where you can choose to go with an expert, and this expert could be a CPA, could be another software that's offering you these solutions. So essentially INRI is helping you do that, and the way this is unique and important is because we are focusing more on the NRI segment here, where we understand, you may have certain reporting such as FBAR, FATCA, which is not generally solvable through TurboTax, and sometimes even CPAs also, kind of ignore that or don't know about it. So essentially, if you are an NRI living in the US, you can file US taxes with us. We offer multiple options, such as filing your W-2, 1099, K1, FATCA. So all of these scenarios are covered, and we cater to individuals, S corps, and even LLCs. The good part here is, in terms of security, iNRI is an authorized IRS e-file provider, and we meet all the security requirements, as set by the IRS.
Got it.
Uh, so scrolling below, just talking about the process, how it works is basically they're just key, simple 4 steps. Tell us about yourself, answer a few questions about your situation, upload your docs, and then, choosing a tax expert and connecting with them as needed over a call or, email anytime. Further, the last part is just the tax expert reviews your forms, prepares the return, and ultimately files it as per your approval. And this is, basically the process after you submit the documents, and we take it from there. And there is a guarantee of like we will make sure that you maximize your refund and you get every dollar you pay and or you deserve on your taxes. In terms of our team, our team has jointly filed more than 1,000 plus filings in their past experience, and people with different experience and different ages are available. So, wherever you find the connect, you can work with them. And I think that's the best part. What I've come across is like I've come across CPAs who do not necessarily understand, what I want and what they are into. And that's where, this very important that you find the right personalized touch here, and you can connect with our experts anytime. Then yeah. So do check us out. We are already live. We have already, started filing. The tax season is already on. And we do have a special code because I'm on Harnu's show. I
Uh-huh.
also want to mention. So if you file in February, use code February and get $50 off. And yeah, thanks.
Excellent. And it starts with $69 a month, letting everyone know that I have paid up to $700 for a CPA in the US as well. And that's the magic of iNRI. Thank you for giving such affordable rates. And awesome. So thank you so much, Himmat, again. It was very informative for me as well. I have some assets in India as well, and it helps me making sure I have my capital gains filed in the US as well. Thank you again, and all the best.
Yeah, thanks, Arun. Glad to be on this show today.